It's Mike Brennan, and we continue on with our sort of abbreviated summer program. We're only doing these every other week, so we can take a little time off ourselves. And I have with me a Paul Eisenstein, a noted auto correspondent. Geez, I've known you since my Free Press days 30 years ago, where I covered a little company called Chrysler before the Germans screwed them up.
Yeah,
Uh, I'm
yeah.
sorry, what did I say? But speaking of getting screwed up, we're going to be talking about tariffs today. And there's the auto industry uses a whole lot of stuff that there's a whole lot of tariffs involved in aluminum, steel, you name it. And they've been trying to hold on without adjusting prices upward, but they're beginning to say they can't do it anymore, right, Paul?
Yeah, exactly. Uh, we have been surprised by how little the industry has passed on tariffs. There have been a few vehicles that they've gone up on, the new Maverick and the new Mach-E over at Ford for 2026. But uh, looking at numbers from JD Power, listening to the CFO at Ford and a few other places, prices really haven't surged very much. The average price, according to Cox Automotive, was a little short of $49,000 in June. We haven't seen the hard numbers for July yet. And the question is, how soon will it hit 50, which would be about a 2% increase? The even the most conservative estimates are we'll probably be hitting 50,000 for the what they call the average transaction price probably by autumn. And the question is, what happens after that? Um, we saw a lot of the automakers report earnings in the last few weeks. And what have we seen? We've seen General Motors report what $1 billion sum from tariff hit, Ford in that neighborhood. Stellantis only got about 300 million, but they're expecting to see several $1 billion in the second half. Volkswagen over $1 billion. Hyundai Motor Group, including Kia, in the $1 billion range. That's real money, even when you're talking by the size of these companies. And the numbers we're talking about are far too big for them to just say, we can take it out of our margins, take it out of profit. So I expect we're going to, like I said, see $50,000 and then continue going up.
Yeah, and there really is no relief in sight because the fellow in the White House doesn't seem to know what he wants to do. Does it first he's going to do it, then he's not, then he pushes it back, and unfortunately, the fallacy is that the companies don't pay the importer doesn't pay that fee. It's the company that's buying it. So GM then has to pass that along to its consumers or eat it in this case, which means they're losing money. So
Yeah,
they
Trump is among, and I'm sorry it's going to sound political, but the reality is, among the many lies he has told about tariffs, he claims the country it's coming from pays. Now that's bullshit. In some cases, you may have a supplier overseas who will take a little bit of a hit. And then you have, of course, the company that is purchasing the goods, and that would be GM or Ford, or it might be another supplier. It could be a Magna. It could be any number of customers here. And they are going to be the ones that are officially on the hook under tariff law. What happens next remains to be seen. Suppliers may swallow some of it, or they may hit the automaker that they sell to. And ultimately, consumers will be hit with some of that or all of it. All the automakers are looking at some sort of strategy. In some cases, they are going to swallow the tariffs because when you're talking about an entry level vehicle, it may be impossible to continue to be competitive if you pass on what could be in some cases $5,000 or $6,000. Let's take a vehicle that comes from, say, Korea that might cost $35,000. Well, or let's say 40,000, fairly close to what the average small vehicle is going for right now. Uh, Tariffs are on the cost of the vehicle, not the MSRP. So that 40,000 vehicle might be $30,000 as far as the tariff regime. The tariff is 15%. It used to be 2.5. So, if you do your quick math, that's 12.5% times $30,000. You're talking about almost $4,000 on a fairly low end vehicle. And that's going to price a lot of people out of the market in a market where people have already, by the millions, been priced out.
And if you look at used car prices, they're reflecting that. Suddenly, used cars is where everybody's going, and supply and demand takes over, and boom, those prices are going up too, right?
Yeah, and we had seen used car prices during the COVID pandemic surge to record levels and beyond, in part because remember there were a lot of shortages. Either factories were shutting down because of COVID or because of semiconductor chip shortages. So there weren't a lot of the new vehicles out there, and there was a high demand. Now, as you got later into COVID and out of COVID, because you didn't have a supply as many nearly new or off lease vehicles, that drove up prices again. So it doesn't matter what you're buying. You're either going to get hit because of demand in the used car market, or eventually you're going to be paying your share of the tariffs. And when we're talking about a typical vehicle, $50,000 vehicle, even if it's coming from a country that has a deal, let's say 15%, you're still talking about $5,000 or more. But here's the bad part. You may actually get hit with more tariffs on vehicles produced in the United States. And people are going, what the heck? Are they using a different phrase?
Yeah.
Um, because number one, every vehicle, I don't care what vehicle it is made in the United States, you find in that a significant amount of imported parts and components. And then you're likely to be spending on the imported steel and aluminum that's used. And Trump is now talking about adding a big tariff, 50% on copper. EVs, that's going to be devastating. But even if you're just talking about a regular gas vehicle, there is a lot of copper in that vehicle, and that's going to further raise the price of domestics.
Yeah. And then if that wasn't bad enough, again, the Trump administration is eliminating the EV tax write-off as of September
Yeah.
30th. So your electric vehicle, which is already what, $60,000 range, give or take?
It's about eight to $10,000 more than comparable gas models, and that's sort of a generic number. And we're starting to see lower end EVs come to market. We're about to see the new Chevrolet Bolt launch early next year, and that may start, if they can hold the price with tariffs down, might start around $30,000. But you won't get the tariff, you won't get the tax break anymore. And with tariffs, especially if they hit them with a copper tariff, 50% of our copper comes from abroad. The price on that vehicle may suddenly surge up into the mid $30,000 range.
And again, it gets back to, unless you're doing like an 8-year loan or something crazy like that, how do you afford that?
Well, it's interesting you said that, Mike, because there have been a couple interesting studies out lately. One talks about the length of loans, and we are seeing record number of people buying vehicles on record length loans. I'm sorry, I didn't think this would come up, so I didn't double check the numbers. But the percentage of people who are doing 6 to 8 years or longer is now something like, I think it's almost a quarter to a third, or if you include 6 year loans, it's like a third of buyers. And it's like 20% that are going for 8 year loans. Add the fact that interest rates haven't come down. And here's where it gets really bad. Because of interest rates and all the other things that people buying on long loans, folks who are now going to trade in those vehicles that they bought on 6, 7, 8 year loans are underwater or upside down if you prefer. So there is now, well, according to a study we reported on Headlight.News the other day, almost a quarter of buyers who are looking to get a new vehicle are underwater. In other words, they are going to actually have to take out a loan to cover paying off the old vehicle they're trading in while also buying their new vehicle. They've got no trade-in value whatsoever.
It is crazy out there. Is there any good news right now in the auto industry?
Well, July sales numbers turned out to be better than everybody expected. A few brands, particularly the Koreans and some Japanese, set records. Korea's Hyundai and Kia both had remarkably good numbers, but on the whole, the July numbers showed that the market is weakening, and it's going to be interesting to watch what happens in August and September. You know, we don't see numbers from a number of manufacturers, including GM and Stellantis, as well as, let's see what else. Nissan doesn't report. A few more. They only report quarterly, so we can only guesstimate how well they are doing. But it looks like the market is starting to tumble off the cliff. And if the tariffs are passed on, we could have a very poor second half of the year.
Yes, and then that would induce probably a recession, although I'm not a professional economist and can't predict that, but I've been covering business for 45 years, so I know how this plays out. So,
Well, it's not just this. I mean, tariffs are hitting everywhere. People who, first of all, you're still paying $8 a dozen for eggs in most places. Um, you're paying more for food. The inflation rate has not come down for food, and with a significant percentage of certain classes of groceries coming from overseas sources, we're starting to see inflation go up there. Fertilizers that are coming from overseas will drive up uh, prices. So when you add all the inflationary impact, this is not going to be good.
yeah. So, where do folks turn when they want to get the latest auto news? This is your shameless plug time. Go ahead, Paul.
Well, they're welcome to come to Headlight.News, Headlight.News. And of course, they can sign up for our newsletters. We'll send you an alert if you're that big on staying on top of things. We'll send you an alert every time we post a story. Most people we find like to get our daily roundup, which gives you a heads up on the stories we've been covering that day. We even have a weekly roundup if you prefer.